Welcome everyone to the CFO Swinger Watch Report technical analysis video for the trading week of June 2nd through 6th. Now, the following research in each and every single weekly report is a chance at applying your own learn and earn trading system. On top of that, the combination of the weekly report and this technical analysis video will give you a complete top-down analysis on the overall markets and individual trade ideas. Overall, every report will be giving you full guidance in the upcoming trading week, allowing you to cut down on the extensive research time that is usually needed to achieve a very successful trading week. So, make sure to join us if that is something that truly aligns to your trading goals. Take a look down at the description box below to start that trading journey with us. With that, let's get into the markets. So first of all, guys, welcome back to the TA videos. So currently, the S&P 500 ETF or ticker symbol SPY on the weekly time frame as shown here is showing all the right and correct bullish signals. First of all, as seen here by this green circled area, or I should say green shaded area, there is a nice gap up that we have yet to fill. And in fact, we have continued to stay away from this gap up area. And this is very, very important because that is also the general area where we had our previous pivot high point sitting at 576.41. Now, obviously, the main level, or now it's a current support level, but the previous resistance level is at 574.50. So this is a very, very key support level, a new support level at 574.50 that bulls have to defend if we are to continue to move up higher and potentially retest this 600 psychological whole number. Now, I've gone over this whole number level multiple times in the private CFO Discord chat room, so make sure you guys go back to those messages. Now, again, as long as we're able to stay above this 574.50, along with the fact that we continue to stay over this previous pivot high point on this weekly candlestick, okay, and again, that's at 576.41, we are set to continue to move up higher. Now, here's the thing. As stated in the market summary from last week, in the private CFO Discord last week, and also in this week's market summary in the report, we have a slight probability that we can be seeing consolidation for most of this month. And in fact, there's a high chance that we could be seeing descending consolidation. And what does that mean? Well, we could be seeing something like this. All right, this is a very rough drawing, but we could be seeing something like this. And we can basically completely tire out both the bulls and the bears, all right, and get them completely out of the market. And what that means is that we're not going to be getting completely radical bulls or completely radical bears trying to gain control. And that also means that we can be seeing less market volatility. And I explain why along with the current sentiment of the markets in the market summary. So please go ahead and read the report first before you watch this video. So again, pause this video if that is you, right? So now obviously this is just one of the many probabilities that are out there, and it's just my own interpretation of where the markets can go based on the data that I provided in the report. But this just seems very reasonable, right? It just seems like we could be forming a very nice bull flag on the weekly time frame, and that will allow my weekly 10 SMA, this red line, to continue to catch up to the price, while we're seeing the weekly 21 SMA continuously supporting the price to stay above this 574.50 level. Now, I also love the fact that the weekly 50 SMA, which was again a previous area of SMA resistance, a major area of resistance, is now acting as a long-term area of SMA support. How do we know this? Well, first of all, the price broke above it. And second of all, we're staying above it, and the weekly 50 SMA is now curling upwards, and this is aligning with the upward movement of my short-term SMAs like the 10 and the weekly the 10 and the 21 on the weekly time frame. So again, there's a lot of bullish indications that are indicating that we are indeed looking to go up higher, but personally, from a subjective analysis, I would love to see, again, based on data, some good consolidation before we decide to head up higher, or at the very least, we can find some sort of a middle ground of consolidation between a wide range of 585 to 600. All right, I wouldn't mind some sort of consolidation range forming between these two major levels. Okay, now for the longer term perspective, heading into even next month of July, I know that's a little bit too early to be saying this right now, but as I've stated in the market summary, there is a good chance that we could be seeing at least minimum a retest of the current all-time high price print, which is currently sitting on this weekly candlestick at $613.23. And so I wouldn't mind if we retest that later on into July, and potentially, now this is becoming even more further into the more predictive analysis is what I should say, or guesstimation. But we could be seeing a potential double top once we hit that retest of the current all-time high price print. All right, so watch out for that. And based on that overall analysis on the weekly time frame, if you go back down on the daily time frame, we're still looking at a pretty similar technical analysis, because on the daily time frame, it does seem like we want to make a bull flag. And here it is. All right, I'm gonna make it very, very quick. All right, so we're trying to make specifically a type of a bull flag, which is what we like to call a bull pennant. Okay, and so obviously this is, it seems like we're about to break out already on the daily time frame. It's not looking like we could be seeing a month's worth or a month's long worth of consolidation, of sideways or descending consolidation. But again, like I said previously, I wouldn't mind if we decide to consolidate between 585 and 600 once we do see a retest of $600. So hopefully that makes sense, right? And again, how would that retest go? Well, once we had decided to firmly break over this bull pennant or bull flag that we are currently making on the daily time frame. Okay. All right. So with that being said, I want to go over gold. Okay. So before I get into the tickers for this week, I want to look at gold. So gold is actually making a pretty standard bull flag. However, gold has made a huge run since 2023, right? And this is a massive base breakout from 2020 all the way up into 2024. So basically 4 years. I would say almost 4 years, or at the very least, I believe it is. Yeah, almost 4 years worth of basing price action that ultimately led out to this very, very large macro breakout that has continued to run all the way up into this fiscal year of 2025. Now, here's the problem, right? Because on the RSI, I mean, you don't even need the RSI to see this, but on the RSI, we're starting to see some very, very macro, longer time frame bearish divergence. And what I mean by that is that, well, we're seeing the RSI making lower highs, while on the other hand, the price is making higher highs. Now, this is not really indicative or confirming that we are going to be seeing a bearish divergence, but this is currently and definitely a formation of a potential bearish divergence, right? And we need to watch out for this, because this current consolidation that we're seeing that is, again, making a pretty solid bull flag could just be a distribution phase that is just starting. And we could be seeing some solid, what it looks like to be a descending consolidation. Again, let me make a very quick drawing of that, very crude drawing. Okay, something like this. Okay, a descending consolidation that could actually just be a distribution phase where we can see eventually gold falling from these current highs very, very rapidly months down the line from now. All right, so this is important to note because, again, I have put some stuff in the market summary in the report itself to explain to you guys why I think this could be the case for gold regarding with, first of all, with the US dollar, even with the VIX, and etc. Okay, so please make sure to read the report. Okay, so now that brings me on to the first and last swing trade idea for this week. CVS. So this is a healthcare name. I believe TradingView has it as health services, specifically medical/nursing services. So again, in the healthcare sector. And I've also explained why I have put this name in the report because of what I said in the market summary. So again, last time I'll be saying this, read the report before you watch this technical analysis video. Always read the CFO Swinger Watch Report first. And that's especially for all the newcomers here, please read the report before you watch this technical analysis video, right? So CVS here, definitely a very good name to be looking at because this looks like it's going to be a very standard support to resistance swing trade idea. And what I mean by that is, well, the share price has come back down to a major pivotal area, and that is the daily SMA support of the 200 SMA, a very major long-term SMA that buyers have to defend, or else they're going to be seeing a world of pain. And we actually saw that happening for CVS when we lost, most recently, the 200 SMA in 2024, in early 2024. So this is pretty interesting to see because with this reclaimed daily 200 SMA, we have continued to make higher lows and higher highs for the last 2.5 weeks or so, right? So we have higher lows here, right here, and then higher highs between these two previous pivot high points. And obviously last Friday made that official higher high. Now, I also love the fact that we're able to retest last Friday at the 64.50 whole number level, which is key because if we're able to break over this resistance level this week, we can have a very explosive run up and potentially retest the next major level of resistance sitting at $67. However, there's a caveat to that because the daily 50 SMA, this dark blue line, is still bogging down on the price. How do we know this? Well, take a look at this price action here, right around this area. Right, we see, generally speaking, that the price continued to be bogged down by this daily 50 SMA. And the fact that it's not curling, kind of making a U shape here, could provide some resistance. Well, I should say some heavy resistance, unless we start to see more and more buyers coming in. And guess what? That is exactly what we're seeing. All right, we're seeing the volume increasing for the past 3 trading days. So since last Wednesday, and last Friday was the highest daily volume that we've seen. And again, it was over the average daily volume of 10.6 million. So last Friday was 13.3 million. So I expect to see even more volume on the potential breakout over 64.50. So maybe around 15 or 17 million. Okay. Now, obviously, you guys should know by now for any of the long-term readers of the report that you guys are provided with the complete 3-point game plan with the entry, stop losses, and profit targets on this swing trade idea. And also on top of that, the specific option contracts that you guys want to be looking at for this name. And obviously, the entire top-down analysis that are given on this name from a fundamental perspective is also provided in the report. So CVS is looking absolutely amazing for this week and potentially for this entire month based on what I've also described in the market summary. Okay, now usually this is where I end this technical analysis video, but I do want to go over one other ticker that is in this report, and that is HIMS, okay? So HIMS and HERS Health Incorporated. So this is in the current NM list, Momentum Mentions list. And guess what? This is also can be considered a healthcare name, right? This is a kind of similar, well, it is similar to CVS, where they provide health services, specifically medical/nursing services, but I wouldn't I mean, based on what I've seen so far, I mean, this is basically a health services. It is a company that focuses on more of providing medications without the need to see a doctor, because again, HIMS and HERS Health, if you guys didn't know, provides a lot of quote-unquote embarrassing medications. I'll just leave it at that most people would not want to go in for a doctor's appointment. But again, this is a healthcare name overall, generally speaking, and this also aligns with what I've talked about in the market summary with CVS as well. Okay, so HIMS and HERS Health, absolutely looking perfect as a momentum mentions list because the momentum is there. How do we know this? Well, last Friday, right? We had a very, very nice reaction from this $52 whole number level of support. And we've been making the support, well, all the way back since, actually, I'm wrong about that, since last week, right? So, or I should say last week, right? So since last week was a very short trading week. And we made this $52 whole number level support at this coinciding SMA support on this daily 21 SMA. So this light blue line right over here. And what I like about last Friday's action in particular is that we were seeing a lot more volume coming in with this very nice bullish looking candlestick. And how do I know it's a bullish looking candlestick? Well, it's a very wide bodied candlestick, right? There's a nice range of bulls completely in control of the price action for most of last Friday. And we're able to come back to retest with the daily the daily 10 SMA, this red line here. And all of this is occurring while the price seems to be making a very nice bull flag, right? We have this nice descending resistance trend line. That is our flag resistance, right? And obviously the flag support is at $52 shown here in this green line, right? So, or I should say on this green line rather. And so as long as the price continues to consolidate this week, there is a high probable chance that we see a very nice momentum filled breakout and also a volume filled, a very, very heavily volume filled breakout over this resistance level, right? This descending resistance level, and ultimately it will have to cross over the next horizontal major resistance level sitting at 59.70, or if you guys just simply want to round up, $58. All right, and I've given you guys also the specific option contracts you guys should be watching out for on HIMS here. So please take a look at the report. All right, so that is it for this video. If this technical analysis video was insightful and most importantly applicable, make sure you hit that like button down below. And if you are new here and you aren't subscribed to the channel, make sure you guys hit that subscribe button as well. But if you're watching this video when it just became public and you would like to watch this video a day earlier when it's private, the only thing that you need to do is become one of the many readers of the CFO Swinger Watch Report, which will automatically give you complete access to the private CFO Discord community where you can expedite and further your learning in trading. All right, and again, you can find all of that information down below in the description box. But if you have any questions that you want to ask me personally, just DM me on Instagram at ChartsFocus1. Again, my Instagram handle is at ChartsFocus1. All right, so good luck, and I'll see you all tomorrow morning.